Hey everybody, and welcome back to the channel. So this is another portfolio update. So the portfolio has finally reached a milestone. We've hit over $25,000 in the account, and that's, feels pretty great. And my next goal will probably be to try to hit 50 and then 100, and then we'll just keep going from there. Just always keep pushing our goals forward. Whenever we accomplish a goal, I'm going to get another goal just to keep me motivated and investing over the long term well into my retirement. So I have two accounts here. I have an RRSP, which is up 9.6%. It's done quite well. Only have American listed dividend stocks in this portfolio, so it's been doing very well. And the TFSA is my larger account. It has a mix of Canadian and American investments. And while the Canadian market hasn't done very well lately, the American stocks that I do hold have been performing very well. So it's good. It's a good idea to be diversified and not have all of your money just in your home country. And you should try to invest outside of it because, you never know which country is going to outperform the other in any given year. It's just better to hold both, to be honest. So I'll just be updating you on my TFSA since that's the account where I made my purchases. So let's start off with Apple. So Apple is officially the first company to hit a $3 trillion market cap and actually keep it until close. So this is a great monopolistic business. They just trap you into their ecosystem. And speaking on monopolies, I did make a video last week about the Hershey company. So I just started a new series where I'm discussing monopolistic businesses and going over the history of the company as well as the stock and just try to determine if it's a good value at the prices that it's at. But otherwise, even if it's not, it's a great idea to just have it on your watch list, maybe research it more because monopolies have great advantages to price their products higher, not really have any competition. Do give that video a watch. I did put a lot of work into researching the company, and I really do think it's one of my better videos, so please do give it a watch. So please leave a like and subscribe to the channel so you never miss any one of my portfolio updates and new episodes that I'm going to do for my Monopoly series going forward. And ATD had phenomenal earnings. So let's start off with their earnings, and they were up. The net earnings were up 29.1% compared to last year, which is phenomenal. Got to be very, very happy with that. Total merchandise and service revenues were an increase of 11%. And same-store sales, which is very important for retailers. If you have any kind of a retail-facing company, make sure you pay attention to this because it can give you signs of whether the company is going in a good direction or a bad direction if the same-store sales decline over time, because it can give you an idea if it's going to be an ongoing trend or not if you continually see this number go down. Ideally, you want to see it go up, and Couche-Tard increased it, so that's great. 3.3% in the States, 3% in Europe, and 5.9% in Canada. Really like having that global diversification and the fact that they can have a lot more growth potential than just a strictly Canadian retailer like, let's say Loblaws, for instance. Having a limitation of only being in Canada will limit your growth opportunities going into the future. And of course, if there's distress in one of the other regions that they're in, they could take advantage of it, make cheap acquisitions, which they've done historically over a long period of time, and the gross margins increase, so they're actually just getting more profitable. The company also bought back many shares in the last year, so they've bought over $2.7 billion worth of shares, and that's essentially buying out 4% of the shares in the company. So if you own some shares of ATD over the past year, they pay, a little bit of a dividend. It's not very big. Let's just call it like 0.7%, but they also bought back 4% of the shares. Effectively, it's like getting a 4.7% dividend yield, although you're just getting more ownership of the company as the company eliminates shares. Each holder of ATD just owns a bit more of the business. Also, when a dividend-paying stock buys back shares, you have to keep in mind that they no longer have to use their free cash flow or their profits to pay back the dividends of shares they've eliminated and bought back. So it leaves them more room to raise dividends in the future for remaining shareholders. And they say that they're going to renew their share repurchase programs, and it's going to allow them to repurchase up to 5% of the shares outstanding. So they're going to keep doing this over time, and that they're just a fantastic business. They have very reliable, predictable cash flows, and they're in a very defensive sector because, people do need food. They need to fill up their car with gas, and I just don't see that changing. And we can see even during tough times, ATD does very, very well. And the market did respond very favorably to those earnings. So, ATD is just a solid company. I think it's trading at a very fair price. So it is a decent consideration if you don't have any consumer staples in your portfolio. Although, of course, always do your own research. Don't buy a stock just because I own it. The right stock for me does not mean it's the right stock for you. Personal finance is personal, and it's going to be different for everybody depending on their goals and risk tolerance. So just do keep that in mind before you plunge into any stock. And then with Aritzia, I'm just going to be waiting on the earnings. This dips quite a bit, but, it's recovered and, just down 2%. I consider that basically flat, nothing really going on there. BAM and BN have been climbing out of their declines, so we'll see if they can go positive. But they're both trading at pretty attractive prices. BN is a bit more discounted than BAM. However, BAM is closer to fair value, although they have that higher dividend, and they are going to grow that dividend very aggressively as this portion of the business is very asset light, and they don't have a lot of debt, and they're paying out basically 90% of the profits to shareholders, which is great if you're just looking for income. So that's why I hold a split of both. I got 5 shares of this for free basically when they spun it off, and then I bought 2 additional since then. But I've been mostly focusing on BN since I want to have all of the Brookfield businesses, not just the asset management. And with Scotia Bank, I purchased 1 more share of this because it went into the $63 range, and I figured, why not? Let's get another share of it. And when I'm going to get my dividend later in July, it's going to be very close to $40. So I'm very close to having one of my holdings just pay me $40 as a dividend, which would actually be the largest dividend I've ever received, which is incredible. So thinking back to the first couple dividends I got, like the first dividend I got was $2.50 from Enbridge. So it just goes to show that if you stick with dividend investing over a couple of years, you can definitely see that increase in passive income coming along each and every month, each and every quarter, each and every year. So Costco has climbed up quite a bit, so they're up 7%. So it's had a nice little rally. They were in the news because they were thinking of implementing what Netflix did with their password sharing crackdown. People just going in using their family members' memberships and not having their own. So they're going to have people at these self-checkout lines, double check, make sure that people are actually using their own memberships and not just hoarding their family memberships and abusing it, because we all know Costco makes most of their money from the memberships, not so much from the selling of goods at their stores. And of course, this could also be a good sign because, one, they'll get more members, they'll get more revenue, and also they can increase the cost of the membership. They haven't announced anything on that yet, but that's something that people are anticipating. Any year now they should be announcing that very, very shortly, but we'll have to wait and see. Overall, they're a very patient company, and they never rush into anything. They're very long-term focused. So that's one thing I like about Costco overall, even though the valuation is, not attractive, although it's never really attractive. So it's just one of those stocks you have to buy whenever there's a slight decline if you want to get into it. I don't think you'll ever get this one really cheap. I mean, if it were to happen, I would definitely buy a ton more Costco. I also purchased one more share of ETHY. So we're up to 71 shares of this. So it's just an Ethereum fund, pays me every single month. And to fund this, I just use ShakePay every month. So feel free to use my link in the description below. I also have a sign up link for Wealth Simple Trade. So if you want to get started with investing in stocks, you can feel free to use that. You'll support the channel and you'll also get up to the value of $3,000. For Granite REIT, I have bought 2.5 shares approximately. So we're up to 6.8 shares of this. This actually declined all the way down to $73. And it had nothing to do with the company itself. It's just a sector-specific thing with real estate due to the fear of Canada raising the interest rates over and over again. But, we did get news that inflation was cooling down in Canada, so that should be a good sign moving forward. So if the Bank of Canada just, pauses those rate hikes or just doesn't increase them anymore, then real estate should rebound anyway. But, granted, it's doing well regardless of that. So I really, really liked it getting at the price of 73, and it didn't stay that down at that level for very long. It had a nice bounce back this week. Unfortunate because I do want to keep buying it. So if it's going to go into the low 70s again, definitely going to focus on it and continue buying it as I want to increase the weighting of this in my portfolio. And with Smart Centers, I also purchased one more share going up to 59. So same thing like with Granite. Every REIT basically has declined, and I think it's a great time to increase my real estate exposure while the prices are down. So you might notice a theme that I'm mostly just buying Canadian stocks right now, and that's due to the relative underperformance of the Canadian market, and that you can mainly attribute that to the higher interest rates. So the banks are down because of the banking crisis, but also higher interest rates. And people are afraid of some recession coming along, and the banks also have to keep increasing the money that they need to put aside for loan loss provisions. So just preparing in the event of bad loans, catastrophic events coming in the future. So the bank's profitabilities are down in the near term, but I'm not worried. Long term, same thing goes for real estate, same thing goes for utilities and the energy sector. So basically, you can just say the Canadian market has been strongly affected by interest rates. And just because the Canadian market hasn't done so well in the first half of 2023, they may not even do well in the second half. There's no way of knowing. I think that there are much better values on the Canadian market than the American market. And that's why I'm not really buying any American stocks right now. Because, Microsoft has run up, Apple's run up, every technology company out there has run up. One in particular is a Tesla. So this one is the best performer in the stock, Apple being second and Tesla being number one. And, more and more companies are signing up to use their charging network. So Tesla's going to have basically, you can think of them having every single gas station in the future, or at least a good majority of them, the ones that charge the fastest. So owning that infrastructure and just getting a piece of that business from everyone is very interesting for Tesla. They also have a lot of different avenues for growth, so they have their full self-driving, they have their robot that they're making, so that could really disrupt like physical labor, because who wouldn't want to buy a robot for one-time purchase? You don't have to pay them a salary, you don't have to feed them, they don't need breaks, they don't need anything like that. So that'll be pretty interesting going forward. And they're also in the AI space as well. They do implement AI in their pursuit of full self-driving, so that's kind of another avenue that Tesla has for potential growth in the future, and that could justify the high valuation it's at today. Not adding at these prices, I would welcome purchasing more, but it's got to go down a little bit. And for the dividends earned since starting the portfolio, we're at $1,499, so almost $1,500 in dividends since I started the portfolio back in February of 2021. Annually, our dividends have increased from 1068 up to 1083 per year. The monthly average has also increased by over $1. So now instead of earning $89.06, we now earn $90.26 per month. Weekly, we're up 2083, up from 2055. And then daily, we went from 293 to 297 every single day that I wake up in the morning. I've already started getting 297 before I do anything. So that's great. And we're only 3 cents away from my $3 a day in dividends goal. So probably one more deposit next month, and I should hit that target very easily. And then I'm going to move the goalpost to $4 a day. And the months to earn $100 has decreased yet again from $1.12 down to $1.11. And the hourly wage, if the portfolio were to work a 40-hour work week for me, it now earns 52 cents an hour instead of 51 cents. So it got a raise at work. So the portfolio is, working all the time for me while I basically just sit back and just collect all that sweet passive income and just reinvest it to further increase the passive income even more into the future. And we can see year over year for 2023, I have almost doubled my dividends for 2021 halfway through the year. So I am projected to hit $1,000 in dividends this year, which is great. All timer $14.99, 2.5 years into investing roughly. And, we're making nice progress. So just going to keep raising those goalposts as I achieve them. So, have small attainable goals at the beginning. And, as you continue investing, just keep having new and new goals. Just keep yourself motivated because investing is a long-term game. And, the longer term mindset that you have, the more likely it is that you will be successful and you will reach your financial goals, whatever they may be. So have a great day, everybody, and happy Canada Day.